What is up, guys? It is Eric Kaz or Crypto Kaz on Twitter, and I'm back with another basic tutorial. So this is probably the most basic trading tutorial that I can do. Like this is we're going to be talking about candlestick, just different kind of candlesticks, what a candlestick is, and no matter what your trading style is, it's important to know the meaning of candlesticks and how they are formed to be the way that they are. So I drew some out here on this chart, and we're going to get into those in a little bit. But first, I'm just going to look at a candle and kind of explain to you what it means. So a candlestick is made up of an open, high, low, and close. And you can see those right up here. O is open, H high, L low, C close. So these really start to make sense logically once you start to understand it. But so we'll walk through one of these really quick. So where's my drawing tool? Right here. So we're gonna look at this big one right here. Sorry, that circle is a little crooked. But so this means this is the open. Remember the O's right up there. Open is right here. The highest point that it gets to is the very top of the wick. The lowest point that it gets to is the very bottom of the wick. And the close is up here. So for a white or green candle, a bullish candle, the close will be on top. And for a bearish candle, or on my chart it's a black candle, the close is on the bottom. So let's talk about a little bit what is going on with price when one of these candles is formed. So these wicks to the top mean that the bulls were pushing the price up during the trading session. So here we're looking at the 1 hour chart. The bulls were pushing the price up, but before the candle closed, the bears pushed that price back down. So here's a good example. This is actually one of the candle patterns or candlesticks we're going to look at. But see, the bulls pushed it all the way up to this point right here. And if you look on the top there, the high is 107.32. So the bulls pushed it all the way up to 107.32. But then the candle ended up closing way down here at 104.70. So this is a rejection candle. It means the bulls tried to push it up, the bears came back and pushed the price all the way back down. So that represents selling pressure. Now a little bit about candle bodies. A big green or bullish candle, on my chart it's white, represents more buying pressure than a smaller candle. So this one we had more buying pressure than on this candle. And the inverse is always true. So for instance, this candle has a bigger body than this one, which means there's more selling pressure here. So now that you kind of get a basic grasp on those, let's talk about some of these candlesticks that you can keep an eye out for on some charts. So first we have spinning tops. A spinning top can represent a reversal, but basically they show indecision, right? So the bulls at one point pushed it up, it got pushed back down, it went all the way down there, ended up closing a little green or a little red, but mainly it just shows indecision in the market. And that means that neither the bulls nor the bears are strong enough to make it a decisive candle to push it in either direction. And they're just kind of fighting over it, and it's hanging out there in the middle. And these small bodies indicate that there wasn't a lot of movement during that candle. Nobody got the upper hand. But these you can keep an eye out for when it comes to a possible reversal. So let's say you're in an uptrend and you're coming all the way up here, and then you get one of those. Sorry, this will be really poorly drawn. You get one of those indecision candles. That looks horrible. And and then you can keep an eye out for it to come back down and do whatever. So those are a sign of reversal. Dojis, on the other hand, these are another indecision candle. There's multiple types of dojis, excuse me, and we'll get into those in a second. Um, Basically, a doji also represents indecision in the market. Um, they look pretty similar, but usually a spinning top has a little bigger of a candle body, and the doji opens and closes at roughly the same price, sometimes at the exact same price. So the Dragonfly Doji shows that the bears push the price all the way down here during the trade session, but by the end of that hour or whatever time frame you're looking at, the bulls push the price all the way back up. So it shows that towards the end, the bulls started to dominate trading because they bought it all the way back up. Gravestone is the inverse of that. So the bulls bought it up during the trading session, bears sold it all the way back down, and it closed very close to where it opened. Moving on, we have Hammer and Hanging Man. These they look exactly the same, but they have different implications. Hammers come in a downtrend, so you're downtrending, and then you get one of these hammers. Let's say we're downtrending here, we get a hammer, and then we'll uptrend after, or at least that's the theory behind it. It obviously doesn't work every single time, but that is kind of how you look for them. Downtrend, bears push it down. By the end of the trading session, the bulls push it all the way back up and turn it into a green candle. And this kind of shows that towards the end, bulls got the upper hand. There was some seller exhaustion, and you can look for a reversal there. Hanging Man, exact opposite. These will come in a uptrend, and these close bearish, so that is what you want to look out for in Hanging Man. So they look very similar, but Hammer comes in a downtrend and the Hanging Man comes in an uptrend. Both of these, however, can signal a reversal. Then lastly, we have the Shooting Star and Inverted Hammer. These also look exactly the same, but have different implications as well. Inverted Hammer comes in a downtrend, and Shooting Star comes in an uptrend. So you need to know how the market is trending to be able to use these candlesticks to their full potential. So if you're in an uptrend and excuse me, if you're in an uptrend and you see a candle like this, it's likely that things will reverse soon after that. If you're in a downtrend and you see an inverted hammer, it's likely that things will reverse soonly after that. So that's just a quick basic overview of candlesticks. Um, don't trade solely based off of candlesticks, but as a trader, it is good to know what certain candles mean or what they imply and just what kind of price action is going on when you do see candles like this.